Welcome to Tulane University's Birkenroad Report video series. My name is Allison May, and I will be discussing the Birkenroad Report's continuing coverage of Cal-Maine Food Incorporated as of November 17, 2014. Our team of analysts include Anna Labadie, Nicholas Leverett, Allison May, and Xingjun Sun. In this video, we will present an overview of the company, an overview of the shell egg industry, an investment summary, Cal-Maine's current financial position, and our final valuation and 12-month forecast. Cal-Maine is the largest producer and distributor of fresh shell eggs in the United States and currently holds the largest market share of shell eggs in the grocery segment. The company's shell eggs are sold under private labels and brand names including Eggland's Best, Farmhouse, and Land O'Lakes. In fiscal year 2014, Cal-Maine sold over 1 billion dozen shell eggs, a record number for any domestic shell egg producer. Headquartered in Jackson, Mississippi, Cal-Maine trades on the NASDAQ under the symbol CALM, under the classification of a controlled company. Commodity pricing of shell eggs is the primary driver of competition within the industry. In general, profit remains highly dependent on the prices of corn and soybean meal used as feed inputs, in addition to the seasonality of demand. Non-specialty egg prices are set by the Urner Barry spot egg market quotation, which reads the market in terms of supply and demand. As a result, shell egg producers have little pricing control in the non-specialty egg sector. Specialty eggs include nutritionally enhanced, value-added, cage-free, organic, and brown eggs, and this sector has historically maintained greater margins. The shell egg industry is highly fragmented but has recently experienced increasing consolidation. Today, the 10 largest producers own approximately one-half of egg-laying hens, but 52 producers each own at least 1 million layers. Increasing capital requirements for technology and efficient facilities maintain high barriers to entry. Cal-Maine's primary competitors within the shell egg industry include Roseacre Farms, Michael Foods, and Land O'Lakes. Poultry processors Sanderson Farms and Tyson Foods can also be considered publicly traded peers, with similar industry factors, distribution channels, and cost drivers. Based on our projections regarding Cal-Maine's future position within the industry, we give Cal-Maine Foods Incorporated a market perform rating with a 12-month target price of $48. We used a combined discounted cash flow and dividend discount model, as well as the price to earnings and enterprise value to EBITDA methods of valuation to reach this projection. This rating was based on our understanding of several key factors in Cal-Maine's operation. Cal-Maine has shown generally steady growth regardless of proxy market downturns, especially in the second half of calendar year 2014, indicating that domestic demand for shell eggs is relatively constant. Cal-Maine's efficient operations are based on good planning and tight control of the shell egg production process. In order to increase self-sufficiency and control, chicken feed is processed in-house. Facility managers work independently for top performance and share best practices. Cal-Maine's stable management has signaled an intent to continue its opportunistic growth strategy through acquisitions. The company has made 18 acquisitions since 1989 and continues to target regional shell egg businesses with significant market share and long-standing customer relationships. Cal-Maine's intent is to expand shell egg production capability in existing markets and to broaden geographic reach. Recent regulatory developments serve as a wild card in terms of the industry future, primarily in regards to California's Proposition 2. Effective January 1, 2015, this legislation will increase the space requirement for all hens producing shell eggs sold in the state. The effect on industry price and demand is unknown, but Cal-Maine has made efforts to mitigate risk through a partnership with Hickman's Egg Ranch that will put Cal-Maine in a position to serve this market and ideally benefit from increased demand and higher prices. As of our report date, November 17, 2014, Cal-Maine was traded at $42.17 per share, with 43.81 million common stock shares outstanding and 4.8 Class A common stock shares outstanding. Common stock shareholders are entitled to 1 vote per share. Class A shareholders are entitled to 10 votes per share, and ownership of these shares is limited to the founder and his immediate family. Over fiscal year 2014, which ended May 31st, the stock price increased by over 50%. The company then effected a 2-for-1 stock split on October 31st, 2014. The company faces limited financial risk due to its position with very low leverage and increasing working capital. Cal-Maine's high cash position allows for smooth acquisitions without taking on debt. Cal-Maine returns value to the investor through both dividends and earnings, so we consider a combination of the discounted cash flow and dividend discount model methods to project the company's expected share price. We determined that this value was slightly inflated due to recent one-time events. In order to account for high-level competition, we also valued Cal-Maine based on price to earnings and enterprise value to EBITDA multiples. Based on these 3 valuation methods, we forecast Cal-Maine's 12-month target price at $48 per share. This concludes our continuing coverage of Cal-Maine Foods Incorporated as part of the Fall 2014 Birkenroad Reports. The Birkenroad Reports are produced solely as part of an educational program of Tulane University's Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you for viewing our video.